If your BAS feels like a guessing game, chances are you've never been shown the numbers behind what you pay. Today I'm going to show you what a BAS is and how you can ensure you're not overpaying. So let's start with what is a BAS. So a BAS is a business activity statement. Now these can be monthly, quarterly or annually, and for most people they do come in the quarterly form. Now a BAS can be made up of one thing or a number of things. So the most common thing that you're going to have a part of your BAS, and what most people will refer to the BAS, is GST. And sometimes you'll hear people say, I've got to do my quarterly GST. Quite often they're referring to their BAS. So GST, goods and services tax, is one of the things you report in your BAS, but there are a number of other things that could be reported, such as pay-as-you-go withheld for your employees, a pay-as-you-go installment, fuel tax credits, and there's a couple other odd things that are very rare. Now most people are on what they call the simple BAS system, so this requires you to report your total sales that you've had for the period, and then you're going to report some items that you owe the ATO. So this will be your GST on your sales, that pay-as-you-go withheld, pay-as-you-go installments, and a few other adjustments if applicable. Then you're going to have a section of money the ATO owes you. So this is going to be your GST on purchases, maybe if you've got fuel tax credits, or if you've got some kind of adjustment to your pay-as-you-go where you're claiming something back. We can then look at what you owe the ATO, what the ATO owes you, and this will give you your final BAS payment or refund amount. For most people, this ends up being a payment amount, but why do people owe on their BAS? So let's start with GST. If your sales is higher than your expenses, this is likely going to mean you owe GST. That's because if we take our total sales and we get our GST on sales, now if our expenses are less than that, our GST on purchases is likely going to be less. This is a good thing though, because it typically means you're making money within your business. Now the other thing with GST on purchases or GST on expenses is that there are a lot of expenses that don't have GST on them. So let's look for instance at something like wages. There's no GST on that. Bank fees, or even interest you pay to the bank, maybe council rates or water rates. None of these things have GST, and therefore your GST on purchases or expenses is going to be less than GST on sales, even if those two amounts are the exact same. Now this could mean that your total sales matches your total expenses, but some of those expenses are GST free or BAS excluded, and therefore you still owe GST on your BAS. If you then have some of these other things, such as pay-as-you-go withheld for employees, well, this is always going to be something you owe. If you have a pay-as-you-go installment, again, this is going to be something you owe. So when you look at these three factors combined, it's much more likely you're going to owe on your BAS rather than getting a refund. Now there's obviously going to be some exceptions to this. Maybe you're in an early startup phase where your expenses are outweighing your income and therefore you're getting GST refunds. Or maybe you've purchased a large item such as a car or something else in a capital in nature that's forced your GST on expenses to be higher this quarter and therefore result in a refund. Now before I talk about how you could potentially reduce your BAS, I just want to give a quick plug to my business, Rooshock Accounting. We help hundreds of clients with their BAS every single quarter. So if you are needing an accountant who can help with your BAS and your business taxes, I'd love to have you join our business. All the links are in the description of this video. But now let's get talking about how you can potentially reduce your BAS. And there's two main concepts I want to talk about here. The first is talking about what you can make sure you can do to make sure you're already taking advantage of what has already happened. So by this I mean claiming all the things you're legally entitled to claim. Now that's a whole nother topic, but making sure that you've got all your business expenses and you're claiming the GST on all of them. Then understanding your income. Is there any portion of your income that should be GST free? Maybe you provide some kind of healthcare service, or you're selling some type of GST free food, or maybe you're doing NDIS services, or maybe you've got overseas clients. If any of your income falls into those four buckets or any of the other potential GST free buckets, make sure you're adjusting for this so you're not paying GST on income you haven't charged GST on. Then the other side of things is what could you do to creatively reduce your BAS? And clients ask me this all the time, how can I pay less GST? Well, the only way to pay less GST is to have either less GST on sales or more GST on purchases. To have less GST on sales, well, typically that means selling less product or delivering less service, which for most people, if I suggest that to them, they quickly say no, because why would you want to reduce your income? Instead, the area people mainly want to focus on expenses. But like I said, if you've already ticked that first box, you know you're claiming everything you're entitled to claim, then the only other way to increase this number is to spend more money. And to spend more money to claim 10% of it back doesn't make sense unless you need to spend on these items. You really need to think about, do you actually need these items? Are they going to help your business grow or help it be more efficient? Or are you just spending money for the sake of saving GST? Because if you're going down that rate, it's probably not worth it. Now, there is the whole topic of cash versus accrual that I should touch on briefly. Cash means that you're claiming things based on when they actually happen. So if you spend money, that is when it happens, when it comes out of your bank account. If you send an invoice out, it's not until you get paid from your customer that you're going to report in your BAS. The accrual method, or the non-cash method, is when you're doing things based on invoice date. So you invoice a customer today, that's when you would include it in your BAS, not when they pay you. Same with expenses. If you get a bill, maybe it's for your electricity, you're going to claim it based on the bill date, not on the day it was actually paid. Make sure you know which method you fit into, because it's going to dictate all of your record keeping, and it will make sure that you get your BAS correct. Now, of course, BAS is just one of the aspects to tax. There are way more than that, and I like to share things with you. So this upcoming video, I go through 3 simple things that you can do to help reduce your business taxes. Thank you for watching this one, and I look forward to seeing you over there.